In this video, I'm going to break down two very unknown business funding methods that will allow you to fund your business. Now, this could work for starting a business from scratch. This can work for buying a business, and this can work for funding a franchise you're buying. So no matter what kind of business that you want to start or buy, these funding methods will work for you. All right, so let's talk about the first. The first one is a funding method that requires you to have zero money. And the second one is one that does require you to have some money in a very specific place. So stay with me. This is important stuff. All right, some of you are thinking, hey, I don't really have much money to fund a business or a franchise or buy a business, or, even if I do have money, I don't want to use it. I want to use other people's money. And so that's where a self-directed IRA comes into play, which is the funding method number one. The way that I learned about this, I actually wound up getting my first job in banking at 18 years old. And I got my investment licenses at 19 years old. By the time I was 22, I had my Series 6, 63, 7, 66. Does that make me sound cool, or does that make me sound like a nerd? Maybe a little bit of both. Anyways, after almost 10 years of working in financial services, I didn't know specifically about self-directed IRAs or how they even worked. It's basically when you have money in an IRA, but you can use it for investments besides stocks, bonds, and mutual funds. You could use it to invest in real estate or loan people money or buy stock in your friend's company. Basically, you put your money with a special custodian. A custodian is just like a Merrill Lynch or TD Ameritrade or something like that. They are all custodians, and they will allow you to direct where that money goes. You actually get like check writing capability from the IRA. So if you wanted to buy a piece of real estate and have that in your IRA, you can do that. Like if you wanted to buy an investment property, you could literally buy an investment property through your IRA, and your IRA is who owns the investment property. Pretty cool, right? You may be thinking, how does this apply to business funding and needing money and me not having any money? It's a good question. You just need to find someone who has money in their IRA, and then they can write you a check through their IRA to fund your business. And so there's a couple of different ways that this can actually be structured. Number one is as a promissory note, AKA a loan. So let's say they loan you $100,000 at 6% interest, and then you make payments back to them, and those payments go back into their IRA. So as opposed to, let's say, putting that $100,000 in the stock market, they go, okay, yeah, I'll loan that $100,000 to you, knowing that they're going to get 6% back on their money, right? Assuming that you actually pay the money back. Or the other way is they can buy stock in your company, and then it doesn't require any payments. It's not a loan. They just become an owner of your company for whatever the percentage or amount of stock that you issued. Pretty cool, right? All right, so let's talk about funding method number two. So a few days ago, I recorded 4 podcast episodes with clients of ours, and I was really surprised to hear that 3 out of 4 of them use the exact same business funding method. The funding method they used is called ROBS. ROBS stands for Rollover for Business Startups. Basically, it's a way for you to use money in your retirement account, so like your IRA or 401k, to fund your business. Hold on, wait a minute, Tariq. If I use retirement money, that's all pre-tax money, and I'll get taxed and penalized 10% by the government if I take it out early. Yes and no. So here's how pre-tax 401ks or IRAs work for those of you who aren't familiar. So let's say you contribute $10,000 to your 401k and you're making $100,000 a year. Basically, you will subtract $10,000 from the $100,000, and you only pay taxes on $90,000 of income. That other $10,000 of income has not been taxed yet. So let's say over the next 30 years, that $10,000 then grows into $50,000. When you go to take the $50,000 out, you have to pay taxes on all of that money. And if you take that money out earlier than age 59 and a half, not only do you pay taxes on it, but there's a 10% early withdrawal penalty that you have to pay to the government, because they don't want you to take out the money before retirement age. But The way a ROBS plan works is, in its simplest form, it allows you to use that money specifically to fund the business without triggering the money being taxable or penalized, because technically it's staying within the structure of the retirement account. So you might ask, well, how? How does that work? It's actually pretty complex. And at the end of the day, you don't need to know exactly how electricity works for you to turn on the lights in your house and get to benefit from it. But the easiest way to explain it is you are going to be opening up a C Corp, not an S Corp, not an LLC, and then you're opening up a 401k plan for your C Corp. Just like if you had a business and decided you wanted to have a 401k through that business, like many of your employers do, you would then roll the money from your IRA and previous company's 401k into your new 401k. And then your new company 401k plan buys stock in your C Corp. Then you sprinkle some magic fairy dust, you say a prayer, and boom, you have business funding. In all seriousness, there's some other things that need to happen behind the scenes. But again, you don't need to understand all of the specifics of how the piping in your house is set up and flows for you to flush the toilet or hop into the shower and turn it on. Now, in order to use a ROBS plan, you do it through specific companies who specialize in putting the structure together for you that I just described. And I've never known a single person to do it on their own, and so I wouldn't recommend it at all. Now, I've dropped a link for one of those companies below in the description if you want to have a conversation with them about how this could work for you and all of the specifics and nuances. So now that you have an idea of how it works, remember those 3 clients that I mentioned that I did a podcast with that all use this funding structure? Well, altogether, they got over $500,000 in funding through using their retirement plans for their business. They didn't take out a loan at all. They were able to fully fund their franchise businesses because they were service-based. It wasn't brick and mortar. My goodness, you would have to pay $500,000 for a single location. But these folks were, I think, on average, about $200,000 to get their business up and running and operating. But now they won't have a loan payment going into starting their business because they use their retirement funds, which allows them to be able to pull money out and pay themselves more quickly and sooner. And it just becomes a lot more helpful. Now, like anything in life, there are pros and cons, and any profit you make through your business has to go back into the 401k and IRA plan that you set up. And although you can pay yourself a salary, actually you have to pay yourself a salary under that plan, but you're not allowed to pull profits out of your retirement account. And then there's also compliance filings and requirements that you need to do every year through whatever company you are using to help you to do the ROBS transaction with, right? So I don't want to get all in the nuances and all in the weeds, although the details are important, right? I think we can all agree that the details are important. But if it's a path that you seriously consider, just make sure to talk to the company that you are looking into using about the specific pros and cons, how it works, and make sure that you just have an understanding going into it. So if this video was helpful for you, then make sure to hit the like button down below, hit subscribe so that you can see all the other videos that we put out on helping you make your first $1 million and more through entrepreneurship. And I look forward to seeing you on the next one. As you're going through this video, you might be thinking, well, I may not want to use some of those funding methods. Maybe there's some other ones that I want to use myself. Well, right here, I made a whole video on all the different business funding methods that you can use. And again, you can use this to start your own business, buy a business, start a franchise, whatever it is that you want. This video will break it down for you. See you there. Peace.